This is Back Roads of Illinois server to farmers and ranchers in central Illinois and the Midwest. This is Back Roads of Illinois server to farmers and ranchers in central Illinois and the Midwest. We're glad you're here on today for our program. I am Cesar Delgado. I'm joining with Jonh Heinburg from TotalFarmMarketing.com. We were talking about the fundamentals with the trade in the commodities markets for this year. This has been Back Roads of Illinois. I'm joining with Jonh Heinburg from TotalFarmMarketing.com. We were talking about the fundamentals of the trade in the commodities markets for this year. Hey, John, how are you? And the Bears are looking good along with the Packers.
I would say that was a very competitive game on Sunday, but obviously the right team still came out on top, like we have 12 out of the last 13 times. Anyway, so with that, let's get into those markets.
John, good to have you again for today. All right.
Yep.
The grains markets and the livestock markets are challenging for this year with these prices for this cattle markets. What is your recap of our commodities markets for this year?
Well, let's keep this as short as we can in terms of where things are. First off, the cattle markets. Let's touch base there today. Big day today. We've seen cash trade just really wake up here in the last couple of weeks and getting some recovery off that sell-off. Now we're actually at a point, the upside breakout looks like a possibility here if cash trade continues to be strong. We've recovered almost 20 some dollars off that low. Again, let's just kind of review the year. Obviously, we had a strong year. I think it's a market we've seen more outside money, speculator money kind of come pouring into with the headlines, things of that nature. Probably pushed this thing a little further than it needed to go, at least in those last few weeks. Obviously, the comments by President Trump and the actions trying to get beef prices down, allowing maybe some more imports in, definitely changed the sentiment of the market. Throw in the fact that then we added that cattle plant closure right at the end there as well, just kind of put us to our what I call the washout low. Now we've seen this market reject that very quickly. The fundamentals haven't changed. We're still tight on cattle. Demand continues to stay relatively strong for U.S. beef here within the country. So that's some of those things that are supporting this market. And again, these markets are driven by the cash price. And lately, these last couple of weeks, live and feeder cattle prices on the cash market have stayed hot. And we're seeing the futures market respond accordingly. So that's kind of at least what we've seen in terms of those cattle markets right now. A lot of volatility, kind of hard for producers to manage, but there's things you can do to kind of make sure you're just building some floor. And, if this market wants to keep running, great. You've got the cattle. If you don't have the cattle, then we got to figure out strategies that we can help you out there. Over into that grain side of the equation, again, you're looking at a market, with the corn market, especially first here. We had strong demand last year that helped support prices, got that yield cut in January that put us to our highs in the end of February, March window. And then prices were just difficult to find any traction. Strong South American crops that were a big factor. Just the extra bushels of corn that were out there, which got validated with the September grain stocks report. Just kept a lid on prices. Again, best marketing opportunities for last year happened in the first 2 months of 2025. So unfortunately, that seems to be a trend we're seeing here now since post-COVID. So here we are now at the end of the year. We got a massive demand tone. We saw the USDA raise that demand target up again. Prices still having a hard time just kind of pushing out just because the supply picture, at least at this stage, still looks relatively heavy, over 2 billion bushels of corn, even with the strong demand. Now, the question as we move into 2026, what's going to happen with that yield? Does the demand stay strong? Then obviously, again, that South American crops coming in the spring, with Argentina corn, late spring, Brazil corn in the early summer, and obviously the reactions of the bean market with Brazil bean harvest, those are all new headwinds that can limit markets gains. So there's a little bit of optimism out there. My biggest concern in the grain markets is just where we are with global supplies and corn supplies here in the United States as we start thinking about what to plan for 2026.
What is your thoughts on the cattle markets moving forward in 2026? We'll be painting with the corn markets, John.
With the cattle market going forward into next year, again, the fundamentals aren't changing. Now we're still one headline away from the border being open and Mexican feeder cattle coming in. That's just going to continue to hang over this market. But again, at the same time, if the fundamentals are still supportive, the cattle numbers are not there. USDA actually just forecasted 26 beef production down again from 25 in terms of total pounds of beef produced. And it just tells you that the supply of beef in the United States is small compared to where it would be. And again, the consumer continues to buy beef. So those are supporting factors that will keep this market supported in terms of prices overall. Now, how volatile does it get? We go back to the 250, 260s. Those are things that we'll kind of have to see. Sometimes you set those historical highs and it's pretty hard to come back and go back through those. But barring some things changing dramatically, the fundamentals in this cattle market are going to continue to be supportive here overall.
The feeder is up for this morning. Wait and see.
Sorry, what was it? That Caesar?
The feeder is up for this morning. Wait and see.
Yeah, it is. And we go look at what's happening in the grain markets too. Nice days, these firm support being held under corn. Here, beans are a little bit scary at this time frame right now.
What is your thoughts with Monday's report from the Department of Agriculture?
Yeah, the report we got in terms of, I'm assuming you're talking the WASDE that came out on Tuesday. Again, pretty quiet report. December typically is not a very aggressive report in terms of adjustments, mostly a placeholder for that January report, obviously, which is now the focus of the marketplace. But you go look at the numbers that came out, no changes on beans. Minimal changes on the wheat side of the equation, a little more impact because of global wheat stocks going higher. That's keeping a living on that market. On corn, again, nice move higher, 3.2 billion bushels of export corn, up 125 million. Did bring carryover close to that 2 billion mark line. Now we're at 2.02 in terms of carryover bushels. Market thought it'd be a little bit higher, about 2.14. So that gave us a little bit of support. But again, corn market's in a sideways pattern now, continues to consolidate or wind the spring per se. Again, trading 445 on the March contract for 11 straight sessions. And realistic, if you go back to October, we've been basically trading this 445, 440, range. So we'll have to see how that kind of plays out. Sometimes you get these long consolidations. If you do get a break, either up or down, that usually gives that market some pretty quick momentum on some triggered trading. So again, Monday's report didn't give us a whole lot, but it does set the base up now for what could happen in January. Do those corn yields come down? What happens with feed demand in terms of the corn market? Soybeans are still trying to figure out the export situation in terms of what's going to be out there. The Chinese demand continues to be a little bit soft at this time frame, even though they're buying beans. It's still not at the pace the market needs, and we've seen that kind of reflected in the price of beans here over the last couple of weeks, especially after we kind of got through the fact that this market was politically charged based on the negotiations, comments being made by the administration. Now that those comments have kind of died down, we're back kind of maybe trading the fundamentals.
What was your numbers for corn yield, John, on the report?
As we get to January, that's going to be a tough one to peg. Obviously, USDA still at 186, and I think the market was a little disappointed. We didn't see a further cut there in that report. I still think we got some room to come down. we could get into the 182, 183 handle fairly easily. And again, the worst part about that sounds like a lot when you're talking 90 million acres. That's 400 to 500 million bushels coming off the pile. That feed demand side of the equation, though, can still come into play if they want to bring things down to maybe the 5-year average, about 250, 300 million bushels. That could easily be taken off the demand pile, and we still have a 2 billion bushel carryover. So those are some of the things that concern me going forward. Is just the fact that even with the strong demand tone, we have a still large supply of corn. Now, is that still the correct yield number? We won't know. Again, they won't be able to adjust that until we get to next September's grain stocks in terms of the supply of corn that's out there. That's the last time they can come back and revise the January numbers. So, but again, that'll kind of give us our placement point for the rest of the year, at least until we get into the spring and start talking about next year's crop and the planting size.
Of course, it's just pretty frustrated by the number from the Department of Agriculture on Monday.
They are what they are at this time of year, and you got to understand what the USDA's process is and how things work in that regard. Again, the easy reactions are to be very negative, but there's still a lot of
Yeah.
very good corn out there, so we'll have to see how it all plays out. I am still in the camp. The yield number does come down. I know there's some people think that it could be lower than last year. That is a possibility. I've heard that from some very key growing areas. But then we got some areas that are, not some of those main core areas that were massive crops compared to last year. So there will be a balancing act that has to happen in terms of that final yield. So we'll just have to see how things play out as we get into January and then start focusing on 2026.
Of course. Do you have any concerns about this cattle markets going forward with the prices?
I mean, always there's concerns against a volatile market. Again, we're one headline away from the border being open and cattle starting to come back in the United States. Excuse me. But with that, the fundamentals are still very supportive, and that could keep things at least elevated in price. But with that, we're not being foolish here. We are working some put strategies underneath. I'm just not in the mindset of really hedging anything and having that risk position in there or selling a call. I just want to make sure we keep the top side open for cattle, build your floors. Yeah, they're probably going to be a softer type target, but at least you can get something underneath the market. And if the market keeps climbing, we roll positions higher.
Finally, what is your position on this grains markets for the new year?
Corn, I kind of went through what I feel for beans. Very cautious of the bean market, but again, it's the bean market, and things can change very, very quickly just given the carryout supply. But I'm still staying on the defensive and looking to be a seller on rallies even for new crop beans. I'm a little fearful, and I hope I'm wrong that 11/25/30 window we hit on November 26th was made to be hard to get to again unless something changes. On the corn side, I'm very friendly corn, at least going into the first part of 2026, just given the demand side of the equation. But at the same time, if we start getting some lifts here, I'm going to make sure we start getting some puts on the market, getting cash sales taken care of, or having producers starting to get coverage in. Last 3 years, we basically put our high in by the 1st of March on the corn market or the 1st of May. I want to make sure we got things going right away here in early 26, because we've had a couple of years of really good production. Talk is corn acres could stay relatively heavy next year. And I don't know if this market can handle a third year again of strong production. So I want to be fairly aggressive in building some floors, but then leaving that top side open in case we have weather markets, strong demand continues, or just some things that are not coming together right here at this time frame. So that's kind of where I'm at in these markets at this point.
Where people can find good more information on your services?
Sure, give me a call, 800-334-9779. Shoot me an email at at totalfarmmarketing.com, and then our website, totalfarmmarketing.com.
Thanks, John. I enjoyed our conversation for today and enjoy your Christmas. You have a good Christmas and New Year.
Have a great holiday as well, and we'll talk to you soon, and go Packers.
This is Jonh Heinburg from Total Farm Marketing, One Back Roads of Illinois. You have a great day.